QuickBooks Online 2025. Set up inventory items. Get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. Here we are in our QuickBooks Online Get Great Guitars 2025 Project 5 we set up in a prior presentation, continuing now to lay down that foundation similar to the infrastructure in a city on which we can then start building the building blocks here in our accounting system, of course being the double entry accounting system itself, entering transactions, that is, with the help and use of forms located under the plus or new button, broken out by cycle. Before we can enter the forms, however, we have to do the foundational items, which are often found under the cog, and we're going to do this as we enter our beginning balances that we are imagining from a prior accounting system. And as we do that, we're going to think about the primary lists, that being the chart of accounts and the products and service list. So let's go over into what we're imagining are our prior balances that we imagine we pulled from our prior accounting system outside of the QuickBooks that we're now going to be putting into our new QuickBooks system, this being as of December of the prior period. In this case, we're going to imagine 2024 so that we can then enter new data, January 2025. We've been thinking about the inventory here, which is often the most complicated item. We talked about why it's complicated in a prior presentation, and we've also entered the service items, which lead into a simplified form of product and service, which now brings us to the more complex entry of the inventory. Now, I know we spent a lot of time on inventory. Note that all the other ones are going to be way easier to do the data input than the inventory. All right, so we're going to imagine we're putting it in the system using the perpetual inventory system, and that means that I can't just do a journal entry. I can't just say, okay, I'm just going to do a journal entry increasing the inventory account and putting the other side to equity, but instead I have to think about the subledger, which is going to break out the inventory not just by dollar amount, but also by the units of inventory. Now, remember that if you're pulling this from a prior accounting system, you're going to run into problems possibly because of differences in the flow assumptions, meaning I have to imagine the inventory that I'm selling is going to have a flow assumption such as the first inventory I bought is the first inventory I sold. That's a first in, first out. That's important because the first inventory I bought might be cheaper. I might have bought it for less because of inflation, which is the typical standard in a civilization, right? In a solid one or a stable one where prices go up over time, typically, right? Hopefully not too much, that's not stable, but they usually go up a little bit, all right? And so that means that you're gonna have to assume that you sold the prior one, or you can use a weighted average system. Now, the problem is that other systems might use a weighted average versus QuickBooks, which might use a first in, first out, even the QuickBooks desktop system. That means, so even if you're pulling in from QuickBooks desktop to QuickBooks Online, if you're tracking inventory on a perpetual inventory system, you have to think about that kind of glitch that might throw things off in terms of you were doing a weighted average system and now you're doing a first in, first out system. So we're not going to get into that in too much detail, but I just want to point it out here. We're going to be pulling this information in, so we're going to imagine that we pulled in the data from our prior accounting system and we had to export the reports for basically inventory, giving us the units of inventory on hand. We need the name of the inventory, of course. We need the cost of the inventory. That's what we sell them for. And we're also going to need the sales price of the inventory because that's what we're going to, of course, sell them for. So you'll see we have a lot more data, a lot more information we need with the inventory than with the service items. Now, if I only had like this many of these items, I could enter them one at a time. But if I have a whole bunch of them, I'm going to want to possibly import them. So as I import these, it's going to put all the inventory on the books. It's going to put the units of inventory in the subledger, and it's going to calculate the inventory amount that should be on the on the balance sheet by taking the units times the cost of the inventory, which will come out to this 2896, and that's the amount that should then be here. Now, where's the other side going to go? I think QuickBooks is going to use an inventory adjustment form, which is typically the form used when we do a physical count of the inventory to see if there's any shrinkage or spoilage or theft, and then we do an adjusting form. That's going to be the form they'll typically use, I believe, to enter the beginning balances as we do this. All right, so let's go back on over and check it out. So if I go then to the sales tab now, and I go into the products and services, I'm going to close up the hamburger. Now we have something in here because we entered the service items last time. So it looks a little bit different than if you just started up from scratch, in which case you want to get into this location first, because I think that'll be easier to do the data input or uploading forms. All right, so that's going to be where we're going to start with. Now, again, let's do a quick look at just entering them one at a time. I won't enter one. I just want to review the inventory items, because this is going to give us basically the headers, which is all the information that we're going to need in an Excel worksheet to import them. So we've got the name. That's a required field. Inventory item, that's going to be the inventory item versus a service item. SKU is an identification number. The category, if we're having multiple categories of inventory, making subcategories of inventory. Then we have the required field of the quantity on hand. It's going to force you to do a quantity on hand, remembering that we only want to enter a quantity on hand if it's the first time or we're first setting up the books. Otherwise, when I set up a new inventory item, I would hope this would be 0, because I'm going to purchase the inventory at that point in time, right? If I put a quantity on hand here, that's what's going to force the system to make a journal entry. So if I want to just buy the inventory, I want to start with 0 and then buy it. So we're going to populate this field this time. Going forward, we will never populate it again. As of date, we want to make sure the as of date is as of the prior period, 2024, so that in the current period when we do data input, we can move forward from there. Reorder point is going to be the point at which it'll remind us we need more inventory. So it might be 0. Obviously, if we don't have any of them, then we need more if we want to sell more. But we might say, hey, look, when I get down to 5 units, then remind me, or something like that. Inventory account, required field. This is the asset account that's going to go up when we buy the inventory with an expense form or bill form, instead of just expensing it to cost of goods sold. We're going to put it into the asset account of inventory asset, which then needs to be backed up and supported by the subledger, breaking it out not only by dollar amount but by unit. We've got the sales description, which is going to populate on the sales forms, invoice form, sales receipts. It will not populate on a deposit form. So we're going to have to use a sales form or an invoice or sales receipt when we sell inventory, if we're using inventory items. The price, this is what we sell them for. This is going to be the account that will be recorded when we sell them with an invoice or sales receipt, meaning it's going to go to an income account for the sales price. And then we have the purchasing information. This is what's going to be populated when we buy the inventory and possibly use a purchase order. So the purchase order might be a request, and then we actually put the inventory on the books with either a bill form, expense form, or check form. And this will be the description on those forms. The purchase cost is going to be what we buy them for, not what we sell them for. The inventory is going to be on the books as an asset for what we buy them for, not the retail price, not what we sell them for. And then the cost of goods sold will be the expense form that will be recorded not when we buy them, not when we use an expense form to buy them or a bill form, but rather when we actually sell them with the invoice. So that looks a little confusing over here, right? Because it's on the purchasing side. We're not going to purchase it with an expense form and record it to cost of goods sold expense. We're going to record it to the asset account of inventory asset. When are we going to hit cost of goods sold expense? When we sell it. When we sell it, that's when we reduce the inventory. That's when we record the sales. That's when we record the cost of goods sold, which is the expense at that point in time, and then get the money with cash or accounts receivable. And then you could put a preferred vendor. That's who we buy it from. All right, so let's close that out. So instead of doing it that way, though, we want to import it into the system. So we did it last time by going to the cog up top and go to the import data. But this time it's possibly more straightforward, or you're more likely to go in here and say, instead of going to the new, I'm going to the drop down and then import from, and then I want to say import from sales channel, or let's do a batch import. I think it's a batch import. So now we've got products with variants. We're going to keep that. And then we have the same place here. We can import the CVS file. A CVS file, once again, you can usually open it with Excel, but it's just a strip of all the Excel formatting. Let's go into here and see what it gives us. We have the download. Let's download the template again. And then what I want to do is line up all of our columns to the template columns and the template headers, which will make it as easy as possible. So once again, I'm going to save this template as an Excel file so I can format it, and then I'll save it again as a CSV file. So let me show you how that would work. I'm going to say, let me save this thing as, and I'm going to go on. So I'm going to save it as an inventory file, and then I'm going to change it from a CSV file to an Excel file. I cannot upload an Excel file, but I can format the Excel file. So I'm going to say, let's save it, and then I'll save it when I actually want to upload it. I'll save it again as a CSV file. So here's the information from our Excel file that has the data, but I'm not quite sure that my headers are going to line up. So I think the easiest thing to do is just to pull the data into this file where the headers should line up exactly. So let's format this thing. I don't need this stuff down here, so I'm going to delete this. I'm going to do this fairly quickly because it's not an Excel course. I want to make these wider so that I can see them. Now that I've got the formatting in place, I can select all of these columns, put my cursor in between any of the columns, double click, and make them wider. I'm going to make the top column bold so I can see it's a header. So I'm going to say Home tab font group bold. None of this formatting is going to stick when I then save it as a CSV file, but it helps me to do the data input. So you can see, so here's my headers that are basically all the fields that we saw on the individual form. So let's just do this one by one, and I'm just going to copy over what's over here into my new worksheet. So the first is the description. So I'm going to copy these. Now I'm going to imagine I'm selling guitars. These are just kind of made up numbers and prices, so these are not what they actually cost, right? But I'm going to paste that here. So I'm going to say paste that. There's going to be the guitars, and then the category. I don't have any categories. That's going to be that would be the subcategory of items. So I'm not going to do anything with that. The item type, they're all going to be inventory. So I'm just going to copy the inventory down. They're all inventory items. The SKU number, I'm going to imagine on our worksheet are these. So these would be a number that represents the sales items. I'm going to give them these description numbers. So those are going to be the SKUs. The sales description, I'm just going to use the same thing, I think, all the way across. So this is the sales description is going to be the same as the purchase description. So I'm just going to use the same thing. So it's going to be, this was the product name. I'm going to put the same thing in the sales description. And then the sales price. All right, how much do these things cost? This is what we sell them for, I believe, not what we buy them for. So I'm looking for the cost, not the sales price. So we're going to say, all right, we sell them for, no, I'm looking for the sales price, not the cost. All right, so I'm going to say, all right, this is the sales price. And then the income account. The income account is the account that's set up within QuickBooks. Now, typically, we're going to group all of our revenue into like one account, which is going to be just simply sales, or you might call it sales of products versus maybe service items. I'm not going to break out a separate income account for each item we sell. I'm not going to break out another account for every type of guitar. Why? Well, that would be a very long income statement. It's going to make the income statement ugly if I were to do that. And also, I can get that added information if I do the data input properly in other reports breaking out sales by item rather than having it on the income statement. So I want to put it into like one income account. This is an income account that's already on the chart of accounts. So if you don't know which income account to go to, you can go into the chart of accounts, right? You can go over here and say, all right, let me close this out. Let me go into my chart of accounts here. That would be under the transactions chart of accounts, and then take a look at what inventory accounts they gave you. By default, they give us this sale of products. Now they give us all of these revenue accounts. Once I enter the beginning balances, I should go in here and clean this up, delete some of these accounts, right? Because we don't need all of them. But we're going to continue on. Purchase description, I'm going to say, is the same as the product and sales description. And then the purchase price, this is what we buy them for. Now this is where it gets a little bit messy, because obviously I can only put in one purchase price here, which means, like, if I'm pulling them from a prior accounting system that used like first in, first out, then it's going to be kind of messy. All I can do is give the average price, really, right? Because I can't use the layered first in, first out as easily when I do the first data input when I start a new system in here. Now, hopefully that'll be fairly easy if you pull it in from QuickBooks Desktop, which used a weighted average calculation, in which case you'll be able to pull in, hopefully, the cost, which will be the weighted average, which will be fine. So the expense account that we're going to go to when we sell them will be cost of goods sold. That's also an account that's on the chart of account. The quantity on hand, how many of these do we have on hand? Let's go back on over. We're going to imagine this is how many we have on hand. So that's going to be here. And so that means the amount that's going to be in the general ledger account will be the cost times the quantity on hand. The quantity as of date, I'm going to say, is 12/31/24. Now that's important because I want to put these on hand as of the end of the prior accounting system, so that if QuickBooks hits an income statement account when they put it on the books, like cost of goods sold or something, then that's okay because it'll still roll into equity. So I want to make sure I put it now in the prior accounting before the current system, which I'm going to start doing new data input in the current period in January of 2025. Reorder point, I'm just going to put 0 across the board. So that's the reminder when we reorder the inventory asset account. This is the account that's going to increase when we purchase the inventory. This is also a chart of accounts account, and by default they give us just an inventory asset account, so we'll go with the inventory asset account. Let me just double check that. Like, because sometimes they give me 2 inventory accounts and it's like, what are you doing, man? You're confusing me. They call it inventory asset. That's it. That's what we want. Okay. Yeah. So we're good on that. So let's save this then. So I'm going to save it like it is, and then I'm going to save as a CSV file, because I need to do that to import it, which will strip it of its formatting. So we'll go to the File tab, Save As, and then I'll browse, and I'm just going to convert it now from an Excel file back to a CSV file. So I want the CSV, comma, delimited, boom, save it, and I'll show you what that looks like. So the CSV file, if you just look at it in your system, it's going to look like kind of like an Excel file typically, because you can open it with Excel, but you can see it has a little bit different of an icon. So if I right click on it and once again look at the properties, I can see it's not actually an Excel file, it's a CSV file, versus this one, if I right click and look at the properties, which is an Excel file. Okay, so let's open it up, and just to take a look at it, if I open it up, then they stripped it. You can see it doesn't have all the formatting on it anymore. It just has the data that's opening as raw data in Excel. It's comma delimited or whatever. All right, so let's close this out. So now I can copy this location, and let's see if we can upload this bad doggy. So now we're going back into the ham boogie. Let's go to the sales tab. And then I'll close up the ham boogie. Products and services, new. I'm going to batch import again, batch import. And so I'm going to import a CSV file. And so this is it. So I'm going to browse. Donde está the CSV file? That's my Spanglish. Donde está Donde for crying out loud está the CSV file. All right, we're gonna, I think it's this one. Dios for crying out loud, míos. Dios for the love of God, míos. It's my Spanglish. All right, so the headers should line up now exactly because that's the beauty of us not trying to change the file that we exported, but rather copy the data into the example file, because then all the headers will line up. So this should be perfecto, just like my friend Mundo would do it. And Mundo's a perfectionist. That's why I coined the term perfecto mundo, which no one else uses. I made it up myself. So in any case, so now we have the buy. So we're going to buy and sell them because they're going to be not just service items, but inventory items, the products in place, type, SKU, sales description, sales price, boom, quantity on hand, no red involved. Let's go ahead and save it. Cross your fingers. You didn't cross your fingers when we did the service item and it didn't work at first. So cross your fingers this time, okay? Because we're going to do this. We have to do it. So let's save it. Okay, so now we're back in our products and services. So that's located, if I open the hamburger, we're back in the sales tab. We're back in the products and services, closing the hamburger. And now you can see that we have the diagnostics we entered last time, the item, our service items versus inventory items. We can sort up top by item so that it gives us all of our inventory items. And so now we've got the name, the quantity on hand, the SKU identification number, inventory account, the price, and then the cost. This is the other factor that can help determine whether it's be an inventory account or service, because only the inventory accounts that are being tracked on a perpetual system will have a cost. So if these have been input properly, then hopefully this will create the general ledger account on our balance sheet, as well as the subledger account tracking by unit. Let's see if that is indeed the case. So I'm gonna go into the ham boogie. Let's go to the reports tab on the left-hand side. And then we're gonna open up our favorite reports. Within the favorites, let's open up that balance sheet report and the income statement. Why not? Right click, open in a new tab. I'm gonna right click on the profit and loss, otherwise known as the income statement, open in a new tab. Let's go to the tab to the right, close up the hamburger. And we entered this as of 12/31/24. So I could go from 12/31/24 to 12/31/24, run it. And so there we have our account, just that one inventory account. Let's go to the other side. Was anything recorded on the income statement? Closing this out, if we go from 01/01/24 to 12/31/24 for the year of 2024, nothing is showing. So it only entered it on the balance sheet account side of things. Let's take a look at it. That means the other side went into equity. It didn't put it into retained earnings, mind you. It put it into opening balance equity. Now, opening balance equity is kind of a made-up account. It's not a professional account. You don't really want to keep it on your books. But it's QuickBooks telling you, hey, look, we forced this transaction because you told us something that made us create the inventory account, and we didn't know where to dump the other side for the double entry accounting system, so we dumped it into equity. We didn't want to put it into retained earnings because that's the account that we close things out to, and so we just made up an account called this, opening balance equity. So that's fine, that's cool. Let's go into, we'll deal with that later. Let's go into this account, drilling down onto what we can call the general ledger account or the transaction report, breaking out the information by date. We enter them, of course, all as 12/31/2024, first day of the prior period. We have the transaction type. Notice, what did it use here? An inventory starting value form. All right, that's kind of like an inventory adjustment form. So obviously you would never really use that unless it was the first time that you're putting the system or stuff on the books, because after that, you're only going to be using purchases of inventory and then possibly usually marking the inventory down as you have to do an adjustment form to tie out the physical inventory to the inventory in QuickBooks based on the physical count. If I go into here, we got the inventory starting value form. Notice that QuickBooks is always using a form to do the transaction. If you learned accounting from a textbook, you're possibly saying, well, where's the journal entry? Why doesn't it just do a journal entry? And it is doing journal entries, but it's doing it with the forms. And when it does it with the forms, it ties out, it's more easy to use the form to tie out to the subledgers. So you want to utilize the forms. That's why we didn't enter it with just a journal entry. So if I then close this back out, it's going to, do you want to leave without saving? I'm going to say yes. And so there it is. And then if I go back, let's go back. The other side's going into opening balance equity. Remembering every account has at least two sides to it for the double entry accounting system. Instead of putting the other side into the income statement, which rolls into equity, they put it directly into equity here. That's fine. So if I go back here, that means our idea is working, right? Because what we're doing is we're making the inventory correct. It's on the books now at 2896. Let's double check that number. It's on the books at 2896. Beautiful, perfect. And the other side dumped into equity. Now it didn't put it into opening balance equity. We don't even have an opening balance equity account as of yet, which would be like equivalent to retained earnings as it is set up right now. But it put it into another equity type account, which is opening balance equity. So as long as it dumps it somewhere in equity, which includes the entire income statement, which will roll into retained earnings or opening balance equity, we're cool with that. And then we'll just fix equity after we enter all these transactions. So if I enter all of these transactions and these balances all work, the other side must have been dumped into equity somewhere, either the income statement, opening balance, retained earnings, which we can then fix to whatever we need to do at the end to put it into the proper equity account. Okay, so that's the idea. That's what we're going to do. All right, so that looks good. Let's look at the inventory subledger, breaking out inventory by unit. So let's open up another report, go into the tab to the right, and I'm going to type in just inventory. Let's open this one up. Inventory valuation summary. Can I open it in a new tab? Let's just open it here. So here we go. And then I'm going to say this is as of 12/31/24. Run it. And so now we've got, I'm going to close up the ham boogie. We've got the units, the description, and then the quantity of inventory, and then the asset value of the inventory, meaning the cost, which gives us our total cost, right? So that's going to be the asset value, and that's going to be the 2896. So the 2896 then should tie out to what's on the balance sheet. And notice it usually does, but QuickBooks does not force us to enter, when we enter something to inventory, it doesn't force us to enter an inventory item. Therefore, it's possible to get the subledger out of balance, which is not the case typically for like accounts receivable subledger, for example, in which case whenever we enter something to accounts receivable, QuickBooks forces us to add the subledger component, a customer. It won't let us record it otherwise. Inventory is not that way for various reasons. Therefore, we have to be more careful with it to make sure that we're not posting something to inventory which doesn't have the proper item attached to it. How do we do that? We don't use journal entries to record the inventory typically, unless it's an adjusting entry, which we'll talk about later. Instead, using the forms, which have the proper characteristics to tie out the subledger, and that's what we do. So if I go back on over here, we also note that that when we do data input now, it should be pretty easy to do. When I buy goods and services, I might use a request form purchase order, or just pay for it with an expense or check form, or possibly bill form. If I go into an expense form, buying the inventory with an electronic transfer, instead of entering the category item of inventory, we don't want to do that. Why? Because it won't post the item, right? It only posts the dollar amount. What we want to do instead is use the inventory item down here, and then the item should be in the drop down. So if I select the item, what would this do if I recorded it? It would record an increase to inventory. The other side decreasing the checking account, in this case with an expense form, which is like an electronic transfer type form, the type of form used in a bank fee type of transaction. But it would also record the increase in units of inventory on the subledger for the type of inventory purchased, which it knows about because that's what we entered in the inventory item. And then when I sell the inventory, I'm going to go to the plus button. I'd sell it with an invoice or a sales receipt. Let's go to the sales receipt, for example. This would be the form possibly used to add a cash register. And when I sell things, it should be nice and easy because I can just pick whatever the thing that they're buying. And then, of course, it gives us the units on hand. So there it is. It records it. Now, note on the sales side of things, we also have to deal with possible sales tax or consumption tax. We're gonna talk about that at a later point. To deal with a sales tax or consumption tax, what do you have to do? You have to tell the system what the sales tax is, entering the sales tax items, and then we tell the system when to apply the sales tax, which will also be driven by the items. So that's not happening now because we haven't turned the sales tax on. Once we do that, we'll talk about that later, and that would be an added calculation down here. What would this do if I record it? It's a fairly complex transaction. It's going to increase the in this case cash or the checking account wherever we're going to put it, or into undeposited funds, which we'll talk about later. And then the other side is going to go to revenue for 500, and then it's also going to decrease the inventory, not by an amount on the sales receipt because we don't want to give that to the customer, but the system knows about it on a perpetual system because of the item. So let's say it was like 400. So it's going to decrease inventory by 400 and record the cost of goods sold, which would be 400. If the cost of goods sold was 400, then the net impact on net income would be the 500 sales price minus the cost of goods sold of 400. Net impact increase in net income for the $100. Also, the subledger for inventory will be impacted, lowering the unit of inventory that was sold as well. So that's a lot going on. And if we had sales tax turned on, it would also basically record sales tax payable increase for the amount that we owe for the sales tax payable, which would not be included in revenue and the sales price. We'll talk more about that later. But note that that's a fairly complex transaction, which even like if we don't know what's going on with someone's accounting system when we go into a grocery store, for example, and do a self-checkout, just scanning an item across the scanner. But the system knows, and although we can basically do it ourselves, we don't even need a checker these days, but we're actually recording something that's quite complex within the system. The system's recording all that at the same time. That's going to be basic. That's going to be the idea. So let's close this out. Leave without saving. So we have everything set up here. And so next time we'll continue on entering our beginning balances, going again with another subledger one next time. I think accounts receivable, but it'll be a lot easier than the inventory.